Great to be here. Thank you very much for inviting us. So talking about mobile payments, the buzzword of this year, hopefully, and how big it can actually get and why we're so excited. So for those of you who don't know about iZettle, we are a similar company to a US company called Square. We do mobile payments and effectively allow for anyone to start accept card payments with a cell phone or a tablet or whatever, taking away pay-in points from the merchant. Easy sign up, become a customer in just a couple of minutes. No fixed fees, no monthly fees, or no whatever type of fees other than a pay-as-you-go fee of 2.75% or less. And same security as the rest of the payments industry. So let's start with killing off one of the myths. Cash is not dead. However, it's becoming a bit of a problem because if you look in the UK, for example, 70% of all UK customers actually prefer to pay with card. And unless a merchant accepts cards, the likelihood of that customer walking through the door is pretty high. So if you look across Europe, you would believe that most companies actually do take payments. But just looking in the UK, pretty quickly you realize that that's not really the fact. Look at UK black cabs. How come most of them still only accept cash? In Europe, we estimate that there are roughly 20 million companies that currently do not take card payments. These companies are typically micro merchants or small businesses between 1 to 3 employees. So it could be a hairdresser, it could be a small cafe that just opened shop, it could be an electrician. What's interesting about these 20 million companies is not the fact that they are transacting at massive volumes. So they're not selling loads of products on a daily basis. But if you look at them on an aggregate level, it becomes much more interesting. So typically, on an aggregate level, on a market-by-market basis, they account for roughly 20 to 30% of the GDP in any given market in Europe. And more importantly, they account for roughly 60% of the total employment across Europe. If you go to other continents, South America, those numbers are roughly 50% of GDP and plus north of 70% in terms of employments. So these companies are actually pretty significant, and still they haven't been addressed by most of the incumbents, I would say. And that's what makes us very relevant. Why haven't they been addressed? Well, it's pure economics. Getting a hairdresser as a merchant for any bank would typically cost them in the area of 500 euros to roughly 2,000 euros. Getting them through merchant onboarding, equipping them with a payment terminal, and getting them going, taking their first card payment. I mean, this is a customer that typically wouldn't transact more than roughly 1,000 euros a month, up to 1,500 euros a month. So from an economic perspective, it's a tricky one. So the banks have solved this by imposing a lot of fixed fees, increasing the barriers of entry. So you get a startup fee if you want to take payments. You get a monthly, I think they tend to call it a monthly technical support fee or something in that, along those lines. And then on top of that, you get a transaction fee. So it doesn't make sense for the small business with a traditional offering to actually start taking card payments. That's what we're trying to change. Taking away all the pain points, everything from having to go to your bank to become a merchant. You can sign up online in 5 minutes. All the different technologies that you used to need is now history. The only thing you need today in order to run your business effectively is an iPad, a tablet, and a payments terminal. Depending on where you are in the world, it's a different type of terminal. And the benefit of us actually using a cloud-based service is pretty obvious. All these merchants that we meet are looking to improve and to grow their business. So they want data. And with the traditional machines and the traditional setup, that is more or less impossible. What we can do is bridge the online and offline gap, providing them with the same tools that online merchants have had for years. Not only do we reduce friction with less necessity of specific hardware, but also looking from a pricing perspective. Many of the micro merchants and the smaller businesses hopefully grow their business over time. And as a consequence, they all want better prices. So in order to reduce the friction of prices and negotiations, we introduced something that we call the smart price. The smart price is effectively a price that actually adopts, so the more you sell, effectively the less you pay. So it's a volume discount. And it's automated, and nobody has to touch it from a merchant perspective or from our perspective. So looking at, is this only a European flaw, or is it a global thing? Looking at Europe, where we are currently in 7 markets, if you look at the fundamentals, I said 20 million merchants are still not taking cards. The density of payment terminals in Europe is around 30 payment terminals per 1,000 inhabitants. If you look in other parts of the world, like Mexico or Brazil, where we launched before this summer, in Mexico there are 5 payment terminals per 1,000 inhabitants. In Brazil there are 20, and Brazil is the 2nd largest card payment market in the world. So there are cards. Consumers want to pay with cards, but there is no infrastructure to actually take them. So to give you an example on how relevant I think this product is for most markets, after 4 weeks from launching in Brazil, 35,000 merchants had signed up and were ready to take their first payment with iZettle in the Brazilian market. We talk a lot about the fact that we want to democratize payments. It's a fluffy word, if you like, but we are trying to fundamentally change a very important piece of infrastructure in the society. I mean, a very big problem for individuals and the smallest companies is the fact that people don't tend to use cash anymore. And to give you a good example in regards to democratizing payments, we launched just a couple of weeks ago in Sweden together with the Swedish version of UK's Big Issue, which is a magazine. It's a street newspaper produced by professional journalists, sold by homeless people, in order for them to get into a first job or whatever you like. This is pretty dramatic. This is a Swedish guy called Jack, homeless guy, walking the streets of Stockholm. Effectively, what he's saying here in Swedish is that big problem for me is roughly 70% of all customers walking past me. The best excuse for not buying my street paper is actually that they're not carrying cash. Since I started taking card payments, that has all changed. I think that's pretty fantastic. And hopefully it shows that we're doing something more to the world other than only payments. Looking into the future of what we're doing, I've been touching upon it already. 95% of all commerce is actually done offline today. And still, most of the offline guys, if you're not H&M or Tesco, don't have any type of access or knowledge on how their business is tracking, performing, and more importantly, how they could further grow their business. So that's where we think we have an interesting and compelling offering. I mean, already today, we're offering, good analytics for these guys. How many of my customers are recurring? How many are coming back on a weekly and monthly basis? Coming up next is obviously loyalty tools. So how can I get them back? Moving away from physical punch cards. Then talking about CRM, et cetera, et cetera. And I think if you put this into a bigger context, if you look across Europe, there are roughly 20 million companies, I've been saying that quite a few times now, that are micro merchants, small businesses, 1 to 3 employees. There are 20 million unemployed people across Europe. So our ambition and our vision is to help these merchants grow to the point where they can all take on board their second employee, or at least the next one. If we get close to that goal and vision, I don't know, but that's what we're working towards. Thanks.